In the previous class of accounting that we have covered, we have left out with the basic accounting terms. Now in this lecture, we will be continuing the basic accounting terms. So what are the basic accounting terms? The first one is account. What is exactly is the account? It is a record of transaction under a particular head of account or a particular head. It not only shows the amount but also their effect and direction. That means, assume that if at all you are running any of the organization or a factory and you have got a credit of 20 lakh rupees. This is of course shown in your account, but is this 20 lakh rupees used for recruitment purposes or for training purpose or for any other purposes? It will be mentioned in this account. This is the account and it is under a particular head, and there is also an accounting department in an organization. The second basic term is capital. What is capital? Just imagine that you have a shop or a grocery shop, okay, in that you have invested 5 lakh rupees with all the amenities or all the things that you have brought in the grocery shop. Now this 5 lakh rupees will act as a capital for your shop, and this is nothing but capital. We can read its definition. Capital, it refers to the amount invested by the owners in the enterprise. We have taken an example of single owner. If at all we consider an organization and there are multiple owners, if they invest 1 lakh rupees each, then this 3 lakh rupees is the total capital for this organization. Fine. Then the next term of the basic accounting is drawings. It is the amount withdrawn or goods taken by the proprietor or the partner for a personal or for his home use. This is nothing but drawings. Just imagine if we have taken an example of a grocery shop. If at all he sells the groceries that are available in the shop to the customers, then it is not a drawings. But if he uses these groceries from his shop to his home, then this is nothing but his personal drawings. It will not be counted as a profit or a gain for him, but it is considered as a drawing from his own investment. Then we will move to the next term, that is liabilities. What is liability? It means the amount owed, that is payable by the business. If at all an organization has taken a 10 lakh rupees loan from the SBI, then this is nothing but the organization should pay this 10 lakh rupees to the SBI within a span of 10 years. Right? This payable is nothing but the liability. That is, the organization owes the money to the SBI. It should pay this amount back to the bank. This is nothing but liability. There are two types of liability. One is internal liability and other is external liability. What is internal liability? As we have seen, there are internal users and external users. In the same sense, if liability towards the owners of the business, that is, if there are two partners in the organization, then if at all one partner has borrowed some of his amount from the other partner in order to invest it in organization, then it is an internal liability as both of them are in the same organization. Then what is external liability? External liability is nothing but that both the partners have borrowed money from SBI, right? That is any of the bank. Then it is nothing but external liability because the SBI is not the part of organization and the money owed to the organization is outside the organization. That is, they are not the part of organization. Hence it is external liability. Now the fifth term is assets. What are assets? These are the properties owned by an entity or enterprise. These are the properties that are owned by an entity or an enterprise. What are properties? It may be a land, it may be a building, fine. It may be the stock that they have kept for the future use. It also acts as an asset for the organization. There are two types of assets. One is current asset and second is non-current assets. Non-current assets and current assets. What are non-current assets? Those assets are those which are held by an entity or enterprise not with the purpose to resell but are held either as an investment or to facilitate business operations. That means if at all you have bought a land for an organization to set a new factory, then that land will act as a non-current asset because the organization has brought it in the sense that it should not resell that land, but in order to create a new factory or a new building for the organization. If at all we consider a real estate, if at all we consider a real estate, and if they have brought the land, then the business of real estate is to resale this land. Therefore, it will not act as a non-current asset for a real estate business, right? For a real estate business, but whereas it will act as a non-current asset for the organization which they have planned for building an organization or a new building. Just a minute, please. Next, what are current assets? Okay, current assets. These are those assets which are held by an entity or enterprise with the purpose of converting them into cash within a short period of time. That is, in this accounting, a short period is nothing but within 1 year. If at all they have occupied that asset in order to resell it within 1 year, then it is a current asset. We can take an example of any of the shop. Okay, if imagine that I have a shop of cloth and I have occupied or procured 20 cloths, okay, and plus 10 extra cloths. Of course I will sell this 10-20 cloths, but my intention of buying this 10 cloth, if at all there is a season and there is a growth in demand for the cloths, then I will resell this 10 cloths in order to gain the profits, and my intention is to resell it within 1 year. Therefore here these 10 cloths will act as a current assets for me. Fine. Next, what are liabilities? What are liabilities? These are obligations or debts. That the enterprise must pay in money or services at some time in the future. Liabilities are debts, for example, amount due to creditors, bank overdrafts, bill payables, loans, etc. Liabilities can also be broadly classified into two categories. There are two types of liabilities. Now we will understand in the simple terms, what are liabilities. If at all I have purchased some of the goods from a supplier for my organization, right? From a supplier from an organization. In return, I will say that I will pay this amount after 10 days, right? And I will give him a DD or a check. Now, this check is a liability on me because I need to pay back this amount to a person, right? I need to pay back this amount to a person, and hence it is a liability on me that I should pay the money for him either in the near future or within a short span of time. Now we will see which are the type of liabilities. These are classified into two categories. One is long-term liability and the short-term liability. What are long-term liabilities? Are those that are payable after a period of 1 year. This is important, as I have said you. In terms of accounting, a span of 1 year is a short term, and above 1 year it is a long term. So here long term are those that are payable after 1 year, after a period of 1 year. For example, a term loan from a financial institution, as we have taken example of SBI, that I have borrowed 10 lakh, then I will pay it after 10 within 10 years. That means it is above 1 year. Therefore, it is a long term liability. Debentures issued by a company. Next, what are short term liabilities? Short term liabilities are such obligations of the enterprise that are payable within a year. This is important. It should be payable within a year. Okay. For example, creditors, accounts payable, bills payable, notes payable, cash credit, overdrafts, short-term loans, etc. Simple example is that if at all I am running an organization and I have recruited 10 persons, and in the agreement it is mentioned that I will be paying you at the each and every month on the last date of the month. Therefore, it is a liability on me, okay, to pay the amount to this person within a short span of time, and it is also within a less than a year. Therefore it is nothing but short term liability, right? Now by this example we can also understand in short term liabilities there are two types of liabilities. One is internal liability and external liability. What is internal liability? Liability that has been on me to pay to the internal users of the organization, right? See, liability towards the owners for the business of the business, right? That means the example that I have said you, I have recruited 10 persons and I need to pay to those persons within a month, right? And this is nothing but internal liability because we both are a part of the organization and we are within the organization, therefore it is internal. Then external liability, whereas paying the amount to the SBI is an external liability because SBI is not a part of organization, therefore it acts as an external agent and I need to pay money for them, and that is external liability. Okay, then there are assets. We have seen what are assets. Nothing but these are some kind of property, like it may be land, it may be some of the factories, or it may be a hospital. These are assets for me. Now in that there are fixed assets and current assets. We have also seen what are fixed assets and what are current assets, but we can revise it. What are fixed assets? Are held for a long use. This is important. Fixed assets are held for a long use in business itself for the purpose of providing or producing goods services and are not held for resale purposes. Okay, and it is not held for resale purposes. That is, if at all I am buying a land and I need to build an factory, then I am not planning it to resale, but in order to create an asset for my organization. Therefore it is not a current asset, whether it is a fixed asset. If at all I am planning to resell that land, then it will lead to the current asset, right? Next, there are some other important terms like expenditure, right? In expenditure there is revenue expenditure and capital expenditure. Okay, in general terms we always think that expense and expenditure are always the same, but in terms of accounting, expense and expenditure are different. In simple words we can understand it. Okay, first we will differentiate what is expense and what is expenditure. If at all in a factory I am buying a machine, if at all in a factory I am buying a machine, okay, for 20 lakhs, my intention is that this machine will gain me 30 lakhs in coming future. Okay, this is called expenditure because I am thinking of a long term. I am creating a fixed asset for me and I am thinking that within a short span of time or within a time of 10 years it will gain me 10 lakh rupees more. This is nothing but expenditure. Whereas what is expense? Okay, in this span of 10 years, okay, there is a repair for this machine and I need to spend 5 lakh rupees, right? I need to spend 5 lakh rupees. But why I am spending this 5 lakh rupees? In order to gain the amount at that span of time, because I need to run the machine in that short span, and this 5 lakh will act as expense and it is not expenditure, right? If at all you have not understood, do comment. We will answer your query. If you need PDF of these files, do join our Telegram channel. Link has been provided in the description. And also there are some of the questions we opt as a quizzes. You can answer the quiz and you can gain more marks in the examinations. Now we will see what is exactly the expenditure definition. It can be defined as the amount spent for a long term. Here it is a long term on an asset which gives a long term benefit like building expenditure, furniture expenditure, plant expenditure, etc. Now there are revenue expenditure and capital expenditure. What is capital? Capital is nothing but expenditure on assets which last for a long time, right? What I said, we have taken a machine for 20 lakh rupees and I am thinking that it will gain me 30 lakh rupees for in a span of 10 years. This is a capital expenditure that I am making. But what is revenue expenditure? That is the 5 lakh that I am spending on a machine in order to run it immediately, right? This 5 lakh is a revenue expenditure. Now we can understand definitions of this. Okay, see, revenue expenditure for items which are used for the day-to-day running expenses of the business. They are normally used up in less than one accounting period and therefore only temporarily increase the profit making capacity of the business. Expenditure on the assets which last for a long time and permanently increase the profit making capacity of the business. Then revenue expenditure. It appears in the trading and profit and loss accounts as a reduction to profits. Okay, it will act as a reduction to profits. Why? Because I need to repair the machine. Whereas I am not investing on the new machine, but on the existing machine, I am making the repair. Then what is capital expenditure? Appears in the balance sheet. It will appears in the balance sheet. Whereas revenue expenditure appears in the profit and loss account. Capital expenditure appears in the balance sheet and increase in the value of assets. Now the 11th term is expense. What are expenses? As we have explained, there is a difference between expenditure and expense, right? And we also know that this 5 lakh that I am investing on the machine to get repair will act as an expense, right? Now in this expense there are two types of expenses. One is prepaid expense and one is outstanding expense. In simple terms, we will try to understand what is prepaid expense and what is outstanding expense. Okay, just imagine that you have a two-wheeler bike. Okay, you have a two-wheeler bike and the insurance of this bike is due on 4th January. Okay, but I am renewing this insurance on 2nd January itself. Okay, but I am getting the benefit of this insurance on 5th January. Okay, that is, I am prepaying the amount in order to get the benefit on the future date. I am paying the revenue amount, I am paying the insurance amount on 2nd January. Okay, but this insurance for two-wheeler will start on 5th January. Here there is a time gap of 3 days. Okay, now this 3 days I have prepaid my expense. That is, I am paying it in advance, but I am getting the benefit after 3 days. This is nothing but prepaid expenses. Next, what is outstanding expenses? Just imagine that there are 10 employees in the organization. Okay, there are 10 employees in an organization. I need to pay 10,000 rupees per month for each employee, but I am not able to pay this amount within the period that I have mentioned. Now this is the amount that need to be paid by me, but I have not paid this amount. Therefore this will be an outstanding expense, that is, I need to pay in the future date. At least in the future date I should pay it, and now this acts as an outstanding expense. Fine. Next, the term is income, profit and revenue. There is huge difference between income, profit and revenue. We will try to understand this in within simple terms. Just imagine that you have a cotton shop. You have brought 5 lakh rupees. You have brought a 5 lakh rupees assets to this shop. Now in this you have incurred 4 lakh rupees on the clothes. Okay, you have incurred 4 lakh rupees on the clothes, but whilst reselling you will get 5 lakh rupees. Now this 5 lakh is complete income for you. Whereas you have, it has cost 4 lakh rupees for you on the clothes, right? The gap of 1 lakh rupees, this 1 lakh rupees is profit for you. Whereas 5 lakh is, this 1 lakh is profit for you. Now we will see what is income. Okay, there is a machine and at that time that you are buying it was 30 lakh rupees. Okay, after reselling you get 35 lakh rupees. Here the 5 lakh rupees is the extra amount that you have got. Now the 1 lakh rupees profit, 1 lakh rupee profit plus this 5 lakh rupees that you got extra on the machine will act as an your income, because this 5 lakh is not the instantaneous amount that you have got, but it was the amount that you have invested previously on the machine and you are getting it now. These are the terms that are important for examinations. See, we can see the definition. Income is the profit earned during the period. Income is the profit earned during the period. Profit means income earned by the business from its operating activities. That is, by selling the clothes, I am getting 1 lakh rupees. That is profit. Revenue. It is the amount received or receivable by the enterprise from its operating activities. There are some other terms that we need to discuss, and in the future lectures we will be dealing with accounting principles, which is one of the important topics, and in EPFO examination you will get directly 4 to 5 simple questions from this. Okay, accounting principle. We will be dealing with these accounting principles in the future classes, such as fundamental accounting assumptions, going concern concepts, and consistency assumptions. These are 3 that first we will be dealing, and these are very important from examination point of view. So do observe the past videos and do revise these videos. Also make the notes. If you want PDF, join the Telegram channel. The link has been provided in description. If you have any query, do comment us. We will try to answer your queries. Thanks for watching the video. If you wish to subscribe, you can subscribe and press the bell icon for notifications.